In this video, we're diving into the hidden discounts that could be lurking in your car insurance policy. What's going on, everyone? My name is Eric Hunsaker, and on this channel, we cut through the fluff to help you keep more of your hard-earned money in your pocket today when it comes to insurance. Now, have you ever wondered why your friend pays less for their auto insurance, even though you both seem to have similar coverage? Like, same car, same commute, same everything, yet somehow their premium is noticeably cheaper. Now, it might come down to discounts, the kind most people don't even know exist. Insurance companies don't always advertise these, and unless you know exactly what to ask for, it's super easy to miss out on. And honestly, who wants to pay more for something as unfun as car insurance? Number one, safe driver discounts. Clean driving record. So this one seems obvious, but it runs deeper than just no accidents. Some companies get super specific. They'll check how many years you've been accident-free, whether the incident was your fault, and even how long ago it happened. A clean record basically signals that this person doesn't cost us money. And when you're low risk, insurers want to reward that. If you've ever had a friend brag about ridiculously low premiums, it's probably because they haven't had a single ticket since high school. Defensive driving course. This is one of the most underrated discounts out there. A defensive driving class isn't just a boring DMV video anymore. A lot of them are short online courses, and they actually teach stuff that you'll use, like how to avoid common crash scenarios, how to handle bad weather, and how to react when someone does something dumb on the road. Most insurers give a discount for completing one because it shows that you're committed to safe habits. Plus, some states even wipe a point off your driving record when you finish the course. That's a double win. How to get it. Don't wait for your insurer to bring this up. They rarely do. Call or hop on their chat support and literally say, hey, can you check whether I qualify for a safe driver discount or a defensive driving discount? It takes 30 seconds and could lower your bill on the spot. Number two, vehicle and equipment discounts. This is where things get interesting because the car that you drive can seriously influence your rate in both directions. Safe features. Even basic features like multiple airbags used to be a big deal. Now newer cars have lane assist, blind spot monitoring, collision warning systems. All of that can lead to lower premiums because those features statistically reduce accidents. Insurers look at your car and basically think, this thing protects the driver. Good. Less expensive crash claims for us. Anti-theft devices. If you've ever had that moment where you park your car in a sketchy lot and you wonder, please still be here when I get back, then you get the importance of this. Alarms, steering wheel locks, immobilizers, GPS trackers. Insurers love this stuff. If your car is harder to steal, the company is less likely to pay out a claim. Even a simple aftermarket alarm can make a huge difference. Eco-friendly or hybrid cars. More insurers are starting to offer small perks for hybrid or electric vehicles. Nothing massive, but every little bit helps. They see hybrid owners as more responsible, statistically, and that translates into slightly lower risk. How to qualify. A lot of people don't realize that insurance quotes aren't always updated with every feature your car has. Sometimes you need to list them manually. If you've never done that, it's worth calling your insurer and saying, can you verify that all my car's safety and anti-theft features are applied to my policy? It might discover features that weren't recorded before. 3. Usage-based and low-mileage discounts. So this is quickly becoming one of the biggest discount categories. Usage-based insurance programs. Now you've probably seen ads for these. Little devices that plug into your car or tracking apps on your phone. They monitor hard braking, speeding, how fast you accelerate, what times of day you drive. Now, if you drive like a normal, responsible human being and not like you're auditioning for Fast and Furious, then you can save anywhere from 10 to 30%. Some people save even more, especially folks who barely ever leave their neighborhood. And honestly, it's kind of crazy how accurate these programs are. They'll show you driving reports that reveal habits you didn't even realize you had. Low mileage discounts. If you work from home, don't have a long commute, or have a second car that you barely drive, this discount is huge. Insurance companies price your policy assuming that you're on the road a decent amount, which increases the odds of something happening. But if you only drive 7,000 miles a year instead of 15,000, your risk is practically cut in half. A lot of people qualify without knowing it. Things to keep in mind. Usage-based programs aren't for everyone. Some people don't like the idea of being monitored. But if you're a gentle driver who rarely slams on the brakes, then this could be your biggest discount. And for mileage, don't exaggerate. If you say you drive 5,000 miles a year and you actually drive 20,000, then you can get hit with a fee or lose your discount. 4. Student and young driver discounts. Young drivers are expensive, not because they're bad, but because statistically they're just newer and less experienced. So insurers try to soften the cost through a bunch of discounts. Good student discount. If you're a student with at least a B average, then your insurer may reward you with a discount. The logic is that students who do well academically are typically more responsible overall. And honestly, if saving money on car insurance is what motivates someone to study, then hey, whatever works. Student away at school discount. So if you have a teenager on your policy, but they go to college more than 100 miles away and they don't take a car, then you can get a discount. It basically says this kid isn't driving often enough to justify full rate pricing. A lot of parents don't know about this one and end up paying teen driver rates for a kid who barely touches a steering wheel 9 months out of the year. Driver training and education. Pretty much every insurer gives a break to young drivers who complete a certified driver training program. It's one of the only ways to bring that first-year insurance bill down to something reasonable. 5. Family and group discounts. Multi-vehicle discount. If your household has more than one car, then combine them under the same insurer. Companies love when you bring them extra business, and they show their appreciation by lowering the rate on each car. Family plan discounts. Some insurers have family-based pricing where every additional driver or car gets a discounted rate. It's almost like a cell phone family plan. The more you add, the cheaper per line. Group and alumni discounts. This is one of the most slept on discount categories. Your employer, your school, your credit union, a professional association, any of these could be partnered with your insurer. And they don't advertise this loudly. I've literally seen people qualify for a 5 to 10% discount just because they graduated from a certain university. 6. Policy and payment discounts. Paid in full discount. Insurance companies love getting money up front. If you pay your entire 6-month or 12-month premium in one shot rather than monthly, you usually get a decent discount. Automatic payment and paperless billing. Switching to auto pay and paperless billing won't save you hundreds, but it usually tacks on a small discount and protects you from late fees. Renewal or loyalty discounts. Now, if you've been with the same insurer for a few years with no issues, some companies will knock a little off your premium as a loyalty reward. But here's the catch. Loyalty discounts sound great, but sometimes staying with the same insurer actually costs you more over time. So use loyalty discounts as a bonus, not a reason to stop shopping around. 7. Bundling discounts. Why bundling matters. So bundling is when you buy more than one type of insurance from the same company, like car and home or car and renters. Most insurers will instantly offer a discount for this because they want more of your business. Sometimes bundling can save you 20% or more, depending on the company. Make sure it's worth it. All right, but here's the honest truth. Bundling is not always the cheapest option. One company might have great auto rates, but lousy home insurance pricing. Another might be the opposite. So you always want to compare the total cost with and without bundling. Don't just blindly assume that bundling saves money. Run the numbers. Bonus tips: staying organized and asking questions. Keep track of your discounts. It's easy to lose track of which discounts you're supposed to have. So make a simple notes list on your phone or in a Google Doc. So which discounts you qualify for, whether each one is applied, when you last checked. You'd be surprised how often discounts fall off during a renewal period and nobody notices. Ask every year. Life changes. Maybe you moved, switched jobs, reduced your commute, installed new safety features, or bought a newer car. A quick annual discount check can instantly save you money. Always compare rates. Even if you love your insurer, it doesn't hurt to get quotes every year or two. Companies change their pricing models all the time. A competitor might offer the same coverage for hundreds less, especially if you qualify for one of their unique discounts. So car insurance is one of those expenses we tend to set and forget. We assume the price is fixed, hit pay, and move on with our lives. But the truth is, most people are leaving money on the table simply because they don't know what to ask for. Taking the time to check for these discounts, even just once a year, can save you a surprising amount of cash over time. And when you start stacking these discounts together, that's when you really begin to see the difference. So if you want to know the best car insurance for you, then we'll have a link to our car insurance survey down in the description below. It'll bring you to this page right here where you just fill out a couple of questions and figure out if you could be saving on your insurance. Now, this is an affiliate link, which means we do earn a small commission when you use it, but at absolutely no extra cost to you. This really helps support the channel, and it allows us to continue to keep making simple, beginner-friendly videos to help you take control of your money. So if you end up using them, we thank you so much in advance. And if this video helped you out, then don't forget to like, subscribe, and tap the notification bell so you never miss a new video. Here on Your Money Friend, we talk about saving, banking, investing basics, and all the little money decisions that make life easier without the confusing jargon. But other than that, thanks for watching, and we'll see you here in the next video.